Welcome back to the Digital Finance Daily News Show. Today, we're diving into the exciting dynamics of the Bitcoin market. Bitcoin is currently trading around $107,000. But why does this matter? A breakout above $114,000 could spark a remarkable 25% rally toward $143,000. What's happening behind the scenes? The US dollar is experiencing serious challenges. It just had its worst first half in over 50 years, dropping by 10%. This fiscal chaos leads investors to look for alternatives. They're flocking to gold, euros, and, of course, Bitcoin. Central banks are also taking note. During a major forum in Portugal, they question whether the dollar can maintain its dominance. For the first time, there are discussions about potential alternatives to the dollar. This creates a new perspective on Bitcoin as a primary hedge against economic uncertainty. Now, let's turn to the Bitcoin ETF landscape. Bitcoin spot ETFs are seeing incredible investment inflows. We've witnessed 14 consecutive days of gains. Just last week, over $500 million flowed into these ETFs, totaling $4.6 billion in June alone. Major players like BlackRock and Fidelity are driving this trend. Interestingly, volatility no longer frightens investors. The largest Bitcoin ETF is now reflecting the volatility of the S&P 500. Bitcoin is shedding its Wild West image, becoming recognized as a core asset. This normalization is something the Bitcoin community has long awaited. Meanwhile, the US and Canadian markets are stabilizing, improving overall risk sentiment. Emerging markets in Asia and Latin America are gaining strength. This year, gold attracted over $8 billion, while Bitcoin leads with almost $15 billion in ETF investments. Technically, Bitcoin is consolidating around $107,000, and momentum is building. A breakout above $114,000 might see it soar toward $143,000, or even exceed $150,000 by year-end. The combination of ETF demand and favorable macro conditions fuels this scenario. Let's not forget the Fed's stance. Chair Powell is cautious, choosing to base any rate cuts on economic data. With inflation easing and job growth slowing, a rate cut is expected by September. This keeps the dollar weak, setting Bitcoin up for potential gains. As Bitcoin integrates more into institutional portfolios, its influence on the financial ecosystem continues to expand. This shift signifies a pivotal moment in both finance and investor psychology. Bitcoin is no longer seen as a speculative asset but as a serious investment. In summary, Bitcoin is maintaining its strength while the dollar falters. Institutions are diving in, and central banks are reassessing their strategies. This is not just a transient moment, it represents a significant economic transformation. If you believe in the traditional finance system, it might be time to rethink your strategy. Don't forget to like, subscribe, and share for more insights into finance's evolving landscape. Looking ahead, innovative financial products are on the horizon. With clearer regulations, we can anticipate new derivatives that cater to both institutional and retail investors. This legitimization of Bitcoin as a core asset could redefine its role in global portfolios. In closing, Bitcoin is not just surviving, it is thriving and reshaping perceptions of digital assets. This signals a new era in finance that demands adaptability and innovation. Stay informed and ahead of the curve.